So we ended up, after really taking some time looking at Hyperledger Fabric, Ethereum, Stellar, each have their pros and cons. We landed with Hedera Hashgraph for us, so not a typical blockchain protocol, if you will, which has also its benefits on scalability. We wanted to have EVM compatibility for smart contracts. Imagine central banks needing to tap into the benefits of not wasting money for the government, for example, or government payments. Imagine smart contracts, making sure that a wallet is still valid before disbursing funds.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast. I'm your host, Tony Edward, and with me today is Carmelle Cadet, who is the founder and CEO of EMTECH. Carmelle, great to have you on.
Thank you so much for having me. Exciting to be here.
Yeah, Carmelle, I'm excited to learn about EMTECH. I've heard a lot about you guys over the years and in talking to folks at the Digital Dollar Project and many others. So let's start, though, with your background. Where are you from? Where did you grow up?
Sure. I am originally from Haiti, born and raised. That is part of the story on why EMTECH, to be honest. When I migrated to the US, I became very fascinated by financial services and how financial products were broadly accessible to people and how it improved their lives, their career, their health, and their standard of living. And I always wondered why wasn't that available from anywhere around the world. Personally, I deeply believe that everyone deserves access to an inclusive and a resilient financial market. And I didn't know what to do about it yet at the time, but I ended up with a career at IBM. Where I fell in love with technology. And that's where really the combination of financial services and using technology to try to make financial markets better is where we land.
So I looked at your LinkedIn profile and I saw your time at IBM, and it looked like you worked a lot on blockchain tech and innovations there. Tell us about that. Was that your first encounter with Bitcoin and crypto and blockchain?
Oh, good question. So my background is in corporate finance. I joined IBM right after college. I actually got my internship in between, and I went back to finish my finance degree. Then joined IBM in corporate finance, always worked in software portfolios at the company, and got to see really some amazing technologies being done and how we transformed enterprises around the world. I like to say that everyone is using IBM, they just don't know it. Just because it runs through the wires of our world, but really got to see how impactful technology can be. But I started in corporate finance, got to see software, security, web sphere, middleware, everything in between. Then ended up going to Treasury and work for IBM. So really a good sense of how to manage kind of corporate finance at a global level. Really loved it. Worked on restructuring about $32 billion of assets for IBM. And then IBM asked me to launch the IBM blockchain division back in 2017. So I was binge watching I was leaving from maternity leave. as they were launching, getting ready to launch a division. And then I came back, kind of hit the ground running. So I was binge watching on blockchain and digital currency during my maternity leave. And I have a picture of my son around 3 months, trying to say blockchain, actually, which is really funny. But I ended up being exposed to really the technology before I got exposed to Bitcoin. I opened my first Bitcoin wallet back in 2017, and was very proud of myself on how much I figured it out. Back then it was there was no Coinbase at the time, but really fell in love with the idea of how do we use technology to bypass some of the rigid structures that have made financial services hard to access for people around the world. Coming from the corporate world, definitely understood risk management, profitability, and had an appreciation for why banking services and banks moved away from a lot of countries and a lot of regions. And given where you are, you'll have an appreciation for this. The Caribbean has become over time a very high risk region for financial services. And it was not worth the investment that was needed in order to maintain banking services. So blockchain for me was really a light bulb moment. Can we provide better visibility, better integration, automated workflows that made financial services accessible, usable, but also more trusted?
Absolutely. And certainly this technology comes at a good time where it can help those folks who are underbanked, don't have access to proper financial services and so forth. So where did the idea of starting EMTECH, how did that come about? Understanding your background and seeing that need, where did it go from, I see this need, but I want to participate, and how did, starting that company come about?
Yeah, just crazy idea, man, to get started on the central banking side. But I had the rare opportunity to be at the table when the first central bank digital currency was being created. I was at IBM at the time, and Central Bank of Bahamas was looking for a blockchain-based solution to modernize their payment infrastructure. And that was going to be the first CBDC. Me and my team at the time decided to pitch. We got some partners to work together, and we didn't think we were going to win, but we actually ended up winning. And ended up kind of really helping the team architect. So we were part of the first phase, the first pilot rollout, very exciting stuff. But the thing that really made sense to me is if a central bank is looking to, at the time we didn't call it that, but now I can say that, tokenize their cash, their sovereign currency, can we provide financial inclusion by design? Can we actually make financial market more resilient by having blockchain technology, distributed ledger technology, better traceability as far as market activity? Quickly understood that actually that can counter anti-money laundering capabilities. People didn't really understand that at first, but the traceability and the visibility of activities allows you to really deep dive and find better patterns, and understanding how money moves. So for me, that was really exciting. That was the answer to my question 17 years before that when I moved to the US. And I saw it and I could not unsee it. So I decided to make the decision to leave IBM, and became an IBM partner when we left, and helped IBM with the delivery around the CBDC in Bahamas. But the very simple idea was to bring cash on blockchain, to put cash on blockchain. We think that could, financial inclusion, resilience, but also better liquidity. If you think about how paper cash works, it's very limited. Yes, more privacy, but very limited to peer-to-peer or physical transportation. And we thought that could be something. So I begged my husband to let me take half of my 401k, everything I could borrow against it, and launch EMTECH. My son was 2 at the time. Very, very big decision, but we thought that this could really make a difference. If we could bring blockchain to central banks, that was a game changer.
Wow. I love that. And I really appreciate your entrepreneurial spirit. And, it is risky. And given the, the time or period in your life, having a young kid and so forth, and like you said, borrowing against your 401k. So that's awesome. And tell us about the services that EMTECH provides. And obviously you're working with central banks, but how are you enabling them to build this infrastructure and so forth?
Sure. As you can imagine, central banks are very conservative institutions. But interestingly enough, they are also very much the anchor of most financial markets. Any running and scaling and active financial market, you would find a central bank or some monetary authority that does practically two main things: issue sovereign currency in that market, so provide that sovereignty of currency, but also regulate the financial market. So if you're going to have financial service providers, central banks are not direct financial service providers, right? They regulate the private sector that is supposed to enable that delivery of financial services. And what we realized, so after I left IBM, started EMTECH, started working with the Bahamas project, but started talking to central banks and realizing that there are just any other enterprise. They are a financial institution that has a different mandate than what on the retail side are familiar with,
Right.
but they were desperately in need of a digital transformation. And that's what we kind of stumble onto. And when we started talking to central banks, realizing that for them, their processes were very manual. The systems that they use haven't changed for over 50, 60 years. Some of them don't have any systems when it comes to processing basic things like license applications or regulatory reporting for a compliance is done still today via paper submission or electronic uploading on a website. Yeah, go to the OCC website and you will find a charter license playbook, a handbook for you to download and have some night reading, or probably hire a lawyer to go figure it out for you, right? But the processes were very, very, or still are, old systems, manual processes, and what we also find out is very expensive way of doing things. For printing cash, the US spends about $800 million a year
Yeah.
to print paper cash. And as economies are becoming more digital, some people would say, who's using this paper cash anyway, right? I mean, do you have cash on you, or do I have, why are we spending $800 million to print paper cash in a digital economy? And then smaller central banks spend about $10 million a year. So there was that high cost component versus what we knew was possible and what we saw coming down the pipe around the tokenization of assets and how much simpler and efficient and scalable that could be for central banks. And that's where we landed with an opportunity to build modern central banking infrastructure. And when we think of that, we bring a platform play to them where they can digitize their workflows on the regulatory side, on the digital currency side. Then we bring really microservices and software services to do data analysis and APIs for them to consume data, receive data in near real time, build better analytical dashboard for them to get a better sense of what the market is doing. And then on the tokenization side, we really took an approach on how do we provide a Web3 enabled digital cash platform? So we partner with layer one protocols. There are certain things that we wanted to make sure that we could have. One, enterprise governance was very important. If I walk into a central bank, it's very hard for me to explain who's going to govern the network that they're going to put the country's currency on.
Right.
The second thing is the scalability and of course privacy. We see really kind of a really love and hate, or a lot of confusion on what privacy really means. But with the rise of Bitcoin and digital assets, you also see that people are comfortable having some level of transparency into what's happening, but maintaining their private information closer to their chest. And we thought that we could actually deliver that. So our portfolio of services is platform-based, highly modular. So a central bank can deploy a module that for their digital regulatory sandbox. We deploy that for them. On one side, you have the central bank. On the other side, you have the financial ecosystem. And then we build what we like to call central banking as a service in between.
Wow, Carmelle, really great insights there. Telling us about many of these central banks, which is a bit eye-opening for me, that they haven't fully upgraded their systems in like 50 to 60 years. So you guys are helping them to do that. So that's really great. And you mentioned some of the layer one protocols. Are you able to tell us which blockchains you have worked with and are currently partnered with?
Sure. I mean, coming from IBM, of course, started with Hyperledger Fabric, had a good appreciation for how that could work into some enterprise use cases. But we also saw some limitations around financial services and tokenization of assets when it comes to Hyperledger. Great protocol for some use cases, but we believe that long term, the retail aspect of cash as a liquidity asset, as a very liquid asset, would really take hold and be better used on a public ledger, public network, with EVM compatibility that can be interoperable with other assets, just like cash is today. So if you walk up to someone and say, top up my Bitcoin wallet, and they take your cash and they send you Bitcoin from their wallet, that nature of it, I think, will continue to happen. And we wanted to make sure that we build with that in mind. So we ended up, after really taking some time looking at Hyperledger Fabric, Ethereum, Stellar, each have their pros and cons. We landed with Hedera Hashgraph for us. So not a typical blockchain protocol, if you will, which has also its benefits on scalability. We wanted to have EVM compatibility for smart contracts. Imagine central banks needing to tap into the benefits of not wasting money for the government, for example, or government payments. Imagine smart contracts, making sure that a wallet is still valid before disbursing funds, or making certain disbursements for special programs. So we knew smart contracts were going to be a component of it. So we really took some time to research, and we really like working with Hedera Hashgraph. They've been a great partner, but definitely a great protocol. And of course, the energy, the fact that we work in emerging market, the energy consumption and the distribution nature of the running of the network is something that we knew that we needed to obfuscate. It was too much to ask governments and institutions to not only adopt a new technology, but also having to figure out how to manage nodes. I saw that very painful process in the early days. It literally kills so many blockchain projects.
Man, I'm getting so much insights here. So I appreciate your knowledge and all the things that are
Oh, no worries.
working on.
I'll slow down here.
No. It's great because I have like a ton of questions on like the steam engines going here. So you mentioned Hyperledger Fabric, and I interviewed those folks, and I know their blockchain is private, but you mentioned you're leaning towards the public blockchains. But question for you, I know with central banks and financial institutions, privacy is a concern, and how are they navigating that? Where maybe, like you said, the retail version is pretty much open, is pseudonymous to a certain degree, or are you using like a private aspect of those blockchains? And I'll give an example, like Avalanche has subnets, private subnets. XRP Ledger has, I believe, I forgot what it's called, the private ledger or something like that. But, some of these blockchains are building these like subnets, which have a private layer. Is that what happening with Hedera?
Yes, Hedera absolutely have what they call a special purpose network with that an institution can deploy. But of course, the trade-off also comes back in, right? So in the moment that you want a private network, you have to have your own governance mechanism, who's going to manage the nodes, who's going to determine the rules of, how frequently transactions are processed. Do you use a typical blockchain, or do you use any other consensus mechanism? There are some problems that I think if you can address the issue of privacy with a public network, then the benefits are so much greater on a public network, right? Just that if you make a list of pros and cons, you end up with so many more benefits if you can figure out the privacy issue. Because you're right, the same way in early days of cloud, right? There was this perception of kind of, oh, well, everything is in the cloud, and who's controlling the cloud kind of thing. But in blockchain, you started with a mechanism of private networks wanting to keep things from an ecosystem perspective. The economics actually just won't let that happen. And I think it's you can look around the world, you'll see the struggle of private networks scaling up. It's hard.
Yeah.
It's really hard. And the ones that have scaled up are more open and public. Are there use cases that you can imagine a private network be better for? Sure. There are some ecosystems, let's say trade or food traceability, where an organization wants to see its own supply chain, right? And you integrate into that and want to have your own visibility. But I think for financial services, some of the problems that we have in today's financial system is the silo aspect of the financial services. And the limitation that comes with those silos, meaning each organization make the rules on how you get in and get out, right? And that's what blockchain was essentially actually turned out to solve very well. How can you provide broad access? I like to say decentralized access. I like to say centralized governance, centralized issuance, but with decentralized access. And public networks do that very well.
As you're saying that, I was thinking about JP Morgan's JPM coin, and they use Quorum, and that would be like that private centralized blockchain, and it's only between maybe their branches or things like that.
Yeah, and you know what? That's a really good example, because JPM, if I'm not wrong, ended up partnering with Consensus and transferred Quorum over to Consensus with MetaMask and so on, which kind of brings you closer to the more public network aspect of it, of Ethereum. But you're right, that's where they started internally. The benefits are limited, though. I mean, JPM coin was moving money between their accounts. I don't know if they need a private coin to do that, right? The benefits of it really become exponential when you step out of your network and being able to have interoperability more with more flexibility.
Yeah, absolutely. Now, I don't know if you can tell us, but how many central banks are you working with, and could you give us any names?
Sure. We are working with 6 central banks today. It's a lot to get 6 central banks to go to that digital transformation, as you can imagine. We anticipated maybe one a year starting in 2022, but we ended up with Bank of Ghana was our first client. We signed the first pilot agreement with them during COVID. It was quite of a trigger for digital transformation. But Bank of Ghana has been such a great model around innovation in this space. Around 2020, they set up the FinTech and Innovation Office at the central bank with a real mandate of engaging FinTech ecosystem, safe innovation, and Web3, blockchain, and digital currency type of approach. So I'm very proud of the team. We actually did a pilot for an ECD hackathon. So that was their first CBDC, Web3 enabled CBDC hackathon. And that was very successful from a central bank perspective, being able to see, can we actually use a public ledger for this? So we were happy to be able to showcase that. And then, but they started with the regulatory sandbox. So the regulatory sandbox is actually a very popular solution that we're bringing to market, because it allows the central banks to navigate their slow process around putting regulatory frameworks in place. and the speed at which innovation is happening. So we bridge that gap by enabling them to say, all right, innovators, we know we don't have a regulatory framework for you yet, but come to the sandbox. We want to make sure that you have your compliance, your consumer protection, that you're not going to do money laundering with whatever product you're launching. We'll give you a sandbox license and we'll supervise how you're doing. And that will inform us on how we should actually regulate this space, but it also accelerates your go-to-market, right? So it's kind of a win-win, and being able to do that with a digital platform, having real-time visibility into their performance, into their data, is something that we enabled, and we have 6 central banks who are deploying that today.
Wow.
Central Bank of Nigeria was our second client, and we're working with Liberia, Sierra Leone, Guinea, and Gambia. So there's a zone that we kind of tapped into, and they're very, very excited to not only digitize what they do, but also regional integration over time.
Wow, that's amazing. Congrats on this success. And, as you're saying that, I can imagine what it's like to pitch a central bank, and, they're usually slow moving, and, you're trying to get them from the analog to digital world. So that's pretty incredible.
Yeah. Nice.
Now, I remember reading, and I think I was talking to Chris Giancarlo, the Digital Dollar Project, about this, that you
Hi, Chris.
yeah,
Hi, Chris.
that you guys ran a pilot for a US CBDC. Tell us about that, and were there any updates? Was the Fed receptive? If you can tell us anything there.
So can't share too much on what happened on the Digital Dollar Project side, but actually when we joined the Digital Dollar Project, we started talking to essentially financial service providers, fintech companies who are trying to think of how can they build on CBDC. There are 2 use cases that we started working on. One was being able to provide financial inclusion. And I know people don't think that the US have a financial inclusion problem, but there are the size of Ghana in the US that don't have bank accounts in the US. So about 30 million people about in the US that don't have bank accounts for various reasons, granted. But the access has moved away from local branches and so on, and whether people are digitally unable to access digital services. But they were in a very underserved and underbanked region where they had a community of people who are either in shelters or coming out of jail or coming out of different situations that don't have bank accounts. How could they provide digital cash to them, right? They don't have to have a bank account to hold cash. And CBDC, on a retail CBDC, if you design it properly, if you have the right regulatory framework around it, you don't need a bank account to hold a CBDC. And that was the beauty of why digitizing cash and tokenizing cash got us excited. The other use case was also very interesting, where they wanted to issue their own stable coin for their local community, but back it with CBDC as reserves. So that was a very interesting mechanism. So you can have the retail and you can have the wholesale component of it, if you will, where it can really be interchangeable as far as what you do with a CBDC, if you are a financial service provider versus if you are a user. So those are very, 2 use cases that we started working on with the Digital Dollar Project participants. We're still going through that, as you can imagine, as people, we're building, but those are the early test cases that became very interesting. And I think that's probably what Chris is referring to.
That's fascinating. And I didn't think about that, but you said a localized stable coin, so it could be maybe, are you thinking a countrywide, nationwide, or like state specific, using the United States as an example?
Think of it as just like US Circle. It enables, or let's say Ripple issues their own stable coin. Think of it as a community base or more targeted type of stable coin that another issuer would issue, and it would be US dollar and it would be 1-to-1. But instead of having cash directly, which cash doesn't pay interest, cash is really kind of 1-to-1. You could create different business models around your stable coins that are different from the CBDC that is backed from, whether you wanted to create rewards program or have a voucher program where if you're using the stable coin, you can go to all the registered, ecosystem stakeholders. If you're in that community, you want to go to that grocery, you want to go to this vendor, you have certain vendors that accept the stable coin. Those are the use cases that I think are going to be very interesting on how proving the resilience that they can have with the backing of cash being one-to-one. If you think about it, Circle is doing the same thing, right? So they have one-to-one backing US dollar, but it's just with BlackRock instead of with the Fed. BlackRock ends up having an account at the Fed. So you kind of you still have the intermediary here that I think over time, as central banks think through how do they provide an efficient infrastructure to the market, that you might see people really engaging and connecting directly into a central bank system, a CBDC system.
That's so fascinating. And as you're saying that, I'm thinking about all the things that have been brought up and discussed over the years, such as, do stablecoins have the reserves, right? Some are using U.S. Treasuries now. I know there's a big question about Tether, even though they have monthly or quarterly attestations. I've heard Howard Lutnick at Cantor Fitzgerald say they do have the reserves. But, to your point, if these CBDCs are put into play, and let's say the United States creates a digital dollar, they would have these stablecoin issuers use that as the reserve. So that's fascinating.
Yes. I think so too. I think so too. And you end up addressing privacy pretty well, right? The retail side, when you look at what the central bank can see, the way you can tell whether there is a level of privacy when it comes to CBDC on the retail side is, one, whether the central bank is the direct interface provider. We've seen a couple of central banks think about how to introduce their own app. That's one, and their own app is the only way to get access to the CBDC. I think that there's kind of at least a perception of the central bank seeing your information directly, but central banks don't really want to do that, because the idea of doing KYC and AML. Central banks don't want the risk of doing that. So they're not in the business of doing that. So I think there's a natural disincentive for them to get into that role. What most central banks are expecting, and have expressed desire to do, the design is really to make CBDC and cash available through the private sector solutions. The same way you have to go to an ATM, you don't go to the central bank, you don't go to the Fed directly to get your cash, you go to an ATM to get your cash. There's going to be an intermediary that provides that. And that information, your private information, is with your provider, not with the central bank. Right. And one of the benefits of using a public ledger is that you can actually see what the central bank sees. Right. And the central bank can say, here's what's on the ledger. Here's what we see. There's no private information on there. In order for us to get your private information, one, it has to be under the construct, whether it's AML or any suspicious activities. But then we still have to go through your financial service provider and work with them for any investigations and so on. The same way it's done today, to be honest, right? If there is any suspicious activity, then your bank is part of the conversation as far as getting information. But that, for me, is a benefit of using public ledger, that everyone can see what's visible. And then the second thing is putting the laws around that and making sure that it's not only codified, but it is legally kind of stated that the central bank does not receive PII under certain, except under certain circumstances. And then the second thing is that the token is designed as a bearer's instrument, meaning if you hold it, it's yours, just like it's cash. No one is coming to you and kind of taking your cash from your pocket. So a central bank should not be able to kind of take cash out of your wallet. Again, minus the extreme circumstances that would require that. But I think that's a good way of being able to address that.
So Carmel, let's walk through a mock scenario here, potentially, hypothetically here, right? I have JP Morgan as a bank. 5 years from now, could I see a JP Morgan being an intermediary where I can access Circle's USDC, PayPal's PYUSD, Ripple's new stablecoin, depending when it's launched, or something else? Do you see banks being intermediaries versus people in the general public don't know who Circle is, they don't know who Ripple is, right? But they know who Bank of America is and TD Bank and JP Morgan. Do you see a scenario like that?
I definitely see banks playing a role. However, I think they have a few things going against them, right? And which opens opportunity for other players. I think the banks don't necessarily have a problem that digital asset is solving for them. You could think about it on the settlement side, security settlement on wholesale transactions, securities, trade payments, and so on that take a few days. But I would argue, depending which bank you're talking to, if they're the one holding that cash, they have the float for 2 days. They're not trying to give that up for 24/7 settlement, right? Money comes in and out really fast that way. I think the opportunity, however, you're going to see the Circles of the world and the PayPals of the world leveraging either their own network or building networks around the product that they're building. And I think Circle did it right. Instead of them being the issuer, it's really working with different issuers and different channels to make sure that this can be accessible in different platforms. And PayPal start with its own network, but bringing it into more, open networks for it to be a more liquid asset, while they maintain the one-to-one that they receive for that. I think is also going a very scalable model. But I think you're going to see a lot of fintechs play into this space. I actually think that the digital asset landscape of products, of fintech products, has not arrived yet. I think there's a whole new generation of financial products that are going to run on digital assets instead of bank rails, whether those are bank stable coins or bank infrastructure. But I think you're going to see new payment entrants just by default going into digital asset payment types. And that requires a different business model if you think about it, right? Different compliance, different partners, different ecosystem to plug into, different risk profile that you need to manage. And depending on which countries, it might be easier to actually expand globally and have your products be used globally. If you have a digital asset, compare if you are a financial institution and you have to give access to people to your system versus, I think there's quite a bit of a new set of products that will be very attractive to individuals, businesses, small and large. I'm seeing more and more corporates actually partner with smaller companies to get into their Web3 strategy. I think that's going to come. And, with the ETFs and the laws that just passed in the US, I spent a lot of time in Africa. There's a lot of headlines that kind of make things confusing on where things are. But I think compared to 2 years ago, the conversation is very different. Just very different. Back then it was, no, 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 no. Today it's, okay, how do we make money with this? Or how can we actually regulate this? Or, it's a different conversation.
Now, speaking of regulations, there's been a lot of political narratives here in the United States. Certain political parties taking action. Well, we're against CBDCs, and and your right to we're concerned about your right to privacy and so forth. And I see the pros and cons. There's tons of pros for CBDCs and digital currencies. I think the one con, which is just a potential, just if we put the guardrails in place, I think like kind of what you're alluding to, where the CBDCs are the reserves, but the retailer is using stablecoins, I think that would work. But privacy is still a big concern for folks. And, Congressman Tom Emmer, who I've had on the podcast a couple of times, he introduced a CBDC Anti-Surveillance State Act. I want to get your thoughts on that. And obviously that's in the United States, but what are the folks in Ghana and so forth? How are they approaching it? Do they have the same level of concern?
Yeah, I mean, I'll start with the last question. I think there's a kind of like learning curve for everyone, right? Like I said, 2 years ago, everyone thought Bitcoin was going to be, just for fraud and only bad people used it. And then until you have BlackRock who wants to use it, like we'll put a whole ETF around it. So I think there's that learning curve, but look, I have a maybe sarcastic way of kind of thinking about this stuff, but if the congressman is pro Bitcoin, then you have by default a level of transparency and openness to your information that you already are providing. I think privacy is a tough term to get people to agree on. I actually posted on Twitter at some point, it's like, what is privacy to you? And I got different answers for everybody who replied.
Yeah.
I think when I look at what the bill proposes, it's not anti-CBDC, it's anti-CBDC that violates your privacy.
Right.
And I believe that there's a way to solve for that. And if you solve for that, then what you're talking about is having a US dollar version of Bitcoin. And I don't think a lot of people would be against that, to be honest with you.
Right.
Because Bitcoin is something that you can't control, yes, decentralized and so on, but is that the only asset that you want to be using? But at the same time, the US prides itself in providing kind of safety and security to the world when it comes to their global currency. People have different opinions about that, but that's where we are. Do you actually see that role in a Web3 world? Do you move away and say, we're not doing CBDC because it is not something that's going to be private, while everyone else is either issuing their own CBDC, or you're seeing a transfer of trust from the US dollar to Bitcoin? I think that's going to be a very interesting conversation for policymakers in the US. In Europe and in Asia, they're much further along as far as deciding. I will never forget where I was when I think it was Governor Ron DeSantis at the time who took the charge on Twitter on anti-CBDC. I was sitting at a BIS summit, which is the Bank of International Settlement, which is a think tank of central banks, in Switzerland, in Basel at the time in Switzerland, watching the European Central Bank, Monetary Authority of Singapore, and Bank of France arguing on whether they should have programmability of their CBDC. Not whether they should be doing CBDC.
Right.
Is debating whether we should have programmability and whether the idea of programmability changes the nature of the singleness of money. Very deep currency central banking conversations that are really more advanced. And then I opened Twitter. I happened to be opening Twitter on that, and because I was kind of trying to post as the event was going on, and then Twitter was blowing up around, kind of US is not doing CBDC. I think it's a matter of time, to be honest with you. I think the odds and the dynamics happening around the world is going to make it a really tough choice for the US to not do this.
Mm. So maybe it's the model you're talking about before where they do the wholesale CBDC. I don't know what blockchain, maybe a private blockchain is running behind the scenes. But like you said, the stablecoin issuers are given regulation and they start pushing it to the masses, and but they have to hold the CBDC as reserves. I think that makes sense. Maybe that's the
Yeah, that's definitely a model. That's definitely a model. What ends up kind of throwing a little wrench in that is that central banks have a mandate, legal mandate, to provide sovereign currency in their country.
Hmm.
And if you delegate that a bit to the private sector 100%, meaning let's just stay reserve, you guys take the retail, if there is a failure in the market where Circle drops or Ripple drops, then what fills the gaps, right? And in finance, we call that concentration risk, if you will, meaning that a central bank as a regulator depends on only on the private sector to provide money and currency. It's not a risk that they're going to take, at least for the foreseeable future. They will continue to maintain cash. There's a reason that they still spend a lot of money printing cash, is because a lot of people still want it, to be honest. And second, it's the last result alternative. When SVB is happening, when FTX is happening, everybody wants their cash.
Hmm.
If you could give it to them in paper, it would be even better.
Yeah.
Just for them to put it on a mattress and feel safe. But I joke, but you want to kind of cash out of those assets, right? Because there is a different risk profile. Any company that issues stable coins is only as strong as their balance sheet.
Hmm.
The US government or the central bank runs on their GDP as their balance sheet, right? So very different risk profile, the likelihood of a central bank failing versus a private sector failing. But you're right. I think those guys are going to fill in a big gap. And then giving people choice on whether they want to keep digital cash, stable coins, Bitcoin, other private tokens, Davido token if they want to. The idea of really having different assets and tokens that they want to keep in their portfolio, I think is going to be something that people actually ask for and look for.
Hmm. I'm so intrigued by how they're going to figure this out. Is it Circle, Ripple, PayPal, the other issuers are tied into the treasury or I don't know, right? It's like,
Yeah, I mean, I think those guys are definitely looking forward to that. I think those guys, if they're not, they should be, but I think they probably see that. Um, think about it, right? Imagine if you had your reserves very compatible as far as asset type or technological standards to your private stable coin, right? So if you need to tap into your reserve, you're not waiting for 2 days while you have 24/7 stable coins running, right? FedNow is not a 24/7 system. The TPS or SEPA system in Europe kind of runs on certain times and they have to shut down and do settlement and so on. So that compatibility is not there. And I think there's a great efficiency for those players to have reserves in kind of central bank stable coins while backed by or to back their own private stable coins.
hmm. So what's on your 2024 roadmap?
Oh man. Okay. So one thing that we're seeing right now, definitely the timing around central banking digitization is upon us. It's crazy to say, but we literally have a backlog of central banks that we're trying to get to
Wow.
and building for them, both on the regulatory side, meaning going from sandbox to supervision for not only current Web 2 type of products, but Web3 that is coming down the pipe, right? So they need better tools. We are building that on the central bank side. We're also seeing the opportunity to create value for the financial ecosystems. One thing that we realize that central banks are regulators. It is not their job to make your life easier as a regulated entity.
Mhm.
And that creates kind of a lot of fragmentation on the ecosystem on how do they engage regulators, how do they do compliance, how do they become more resilient, and how do they minimize their compliance risk and get shut down in the middle of them growing. Those are problem and pain points that we're looking at addressing. So for us, we're looking at bringing the sandbox into more countries, increasing our product portfolio with the central banks that we're winning. And we're very hopeful of a new CBDC launching soon. We'll see.
Oh, that's awesome. Well, I'm excited to see those updates. I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Oh man, I never had that question before.
If you put your Oculus on or
Yeah, yeah,
Apple Play
yeah.
Vision, there you go.
Well, I would definitely reinvent Haiti.
Mm,
I would reinvent Haiti. I would love to take Haiti and everywhere with me, at least the Haiti that I have in my mind and what I remember and what my parents used to talk about. That would be pretty cool, given how almost impossible it is to imagine today. I was talking to my mom for a good hour last night and just talking about how things are happening in Haiti right now. Given how impossible it seems, I think creating a metaverse that recreates it and that reimagines it would be really cool.
that's awesome. And I got some rapid fire questions for you. Favorite food?
Yeah. Favorite food. Um, I'm a foodie, so that's a hard one.
Mhm.
Tacos. I'll say tacos.
Favorite musician or band?
John Legend.
Nice. Favorite movie?
Dirty Dancing.
Favorite book?
Um, Seven Principles of Vision
Hmm. And when
by
you're not,
Dr. Miles Monroe.
I gotta check that out. And when you're not working at EMTECH, what are you doing for fun?
Going to baseball practice, basketball practice, um, cooking, not hanging out with my friends or calling my friends enough, that's for sure. And then trying to exercise. That's kind of like my thing. So I'm trying to, kind of maintain and protect my regime a little bit, but those are the things that kind of take me away from MTech.
Awesome. Carmel, absolute pleasure. I appreciate your knowledge and insights. And I got to have you back on because I'm very fascinated by what these central banks are doing in the future of digital currencies and CBDCs. But
Yeah,
congrats on all the success. And thank you so much for joining me.
sounds good. Thank you for having me. I think it's been a long time coming, and I'd be happy to come back. So let's do it again.
Awesome.
All right.